July, even August, if you were to do that, you can have some very, very nice gains on your hands by the end of the year. To give you an example, in 2001, if you were to make a purchase of precious metals in June or July, you were looking at about a 3% gain. In 2002, it was 8%, 2003, 18%, 2004, 10%, 2005, 20%, 2006, it was roughly 3%, 2007, 26%, 2008, we were in a negative position that year at 5%. The last couple of years have been particularly good. 2009, roughly 15%, 16%, 2010, roughly 16% again. And people are prognosticating that from now until the end of the year, very easily, we could see anywhere from 10 to 15, 20% by the end of the year. But this is a must-read article about seasonality of precious metals and making an investment in gold and silver during June and July. It's something that is time-tested and has worked very, very well. Harold, I know that's something that we've talked about for many years on the show, and it seems to be very consistent as you read those numbers and go through the charts, and people can see those charts in our newsletter. It's a time where I know obviously people want to relax a bit, have a little fun in the summer, but it's also a time where you can take advantage of seasonality for precious metals.
You bet. And the fact is that it's happened many, many times. In fact, it happens 9 out of 10 years. The reason that we feel that we could get a rally in the silver market over the summer when things are quiet is primarily because what's happening in Greece. However, if you look at what's happening with the dollar right now, with the currency markets, and by the way, gold and silver are coming back off of their lows, but if you look what's happening in the commodity market, the dollar is up today, but it's still dropping. The U.S. dollar is down to 74.60. By the end of this year, I believe that the dollar will be at 71.50, which is why I calculated the gold will be at 1,850. The fact is that the euro is rallying at this point here, which tells me that things are worse with the U.S. dollar than they are with the euro. The euro is back up to 145, 146. If the euro was to break 150, we could see a rally to 160, 165, which is again why I believe that we're going to see the U.S. dollar down to 71.50. Now, why is that important? Because gold goes up and silver goes up when the U.S. dollar goes down. And all those, obviously being Canadians, we say, well, gee, the Canadian dollar will get stronger and stronger as the U.S. dollar gets weaker and weaker. So when I convert back to Canadian dollars because gold is priced in U.S. dollars, am I going to lose money? The fact is that you do have to know how to trade these markets, and that's why we appreciate tremendously, number one, that you listen to the radio show, and number two, if you have any questions and you don't know, the answer to them, just pick up the phone and give us a call. I'm here for any caller that listens to our radio show. I take calls all day long, so if you have questions or you're not up on what's happening in the currency markets or you need some help in that area, just simply pick up the phone and give us a call. We want to make certain that the listeners to our radio show are doing the right thing. That's why we make this opportunity available. But the fact is that, the currency markets are extreme at this point, and the U.S. dollar will continue to fall, and as the dollar continues to fall, gold's going to go up. Now, what's going to happen eventually and where the exit strategy will be, in my opinion, is that the U.S. will not raise interest rates. The Federal Reserve will not raise interest rates enough within the next 2 years because they don't want to affect the stock market or the recovery in real estate. So interest rates are going to stay low. That's why we say for the next 2 years we're going to get a very strong rally in gold and silver that'll take us to record prices that really nobody dreamed possible before. However, eventually, and it's probably going to happen in year 3 and 4, that they're going to have to raise interest rates. But the Federal Reserve will be very cautious, and they won't raise interest rates heavily enough at the beginning to affect the metals at all. In fact, they're going to have to raise interest rates, in my opinion, all the way to 20% in order, to deal with this inflationary situation that is so extreme. So that's what our exit plan is going to be. If we just hold on and wait until this situation happens, and the reason that I believe that's going to happen, it's the same situation that happened in 1980. They ended up fighting inflation, raising interest rates. Interest rates went up to 20%. And by the way, when interest rates hit 20%, that's when gold peaked out at $850 and silver peaked out at $50. So again, even though the Federal Reserve will raise interest rates, unless they do it substantially, it's not going to have any effect on gold and silver. That's why I'm saying that for the next 5 years, I feel that that's our window of opportunity to make a tremendous amount of money. And then when interest rates go up, what will happen is the U.S. dollar will rally. It'll become a stronger currency. The Canadian dollar and other currencies will back off, and that's when we're going to liquidate our gold and silver because, again, gold and silver are traded in U.S. dollars. So, again, I'm very comfortable with that scenario because there's no doubt that in my mind that eventually they're going to have to do the right thing and raise interest rates, and that's our exit strategy for precious metals.
Well, it looks like they're going to have to inflate their way out of this, and we could get into a severe inflation situation and hyperinflation, and ultimately it could lead to much higher rates. To invest in precious metals, the telephone number 1-866-623-2002, 1-866-623-2002, the website www.pmc.com, www.pmc.com. You can go to the website and sign up for the newsletter there as well. Some good quotes this week. Donald Cox, and he used to be with the Bank of Montreal. He broke off and has his own company now. He said that the only gold bubble likely to burst is the bubbling ridicule of gold. He said gold has for millennia been the one commodity that can always be used to buy other assets or goods and services. It will always have that basic and completely useful function. Coming out this week, Jim Sinclair, a guy that we have followed for many years, have a lot of respect for, said that gold could exceed, based on the balance of the U.S. debt, and you can see the calculation in the story in our newsletter, gold to exceed $12,500 based on the amount of debt the United States is racking up. Also, John Hathaway, a fund manager, has confirmed that he believes we could see gold trade into the 5 digits. Peter Schiff came out this week and said that we will destroy the U.S. dollar completely. The more mistakes the Fed makes, the more stimulus the government pours into the economy, the brighter gold and silver are going to shine. Since I'm optimistic that the government will keep doing the wrong thing, I'm optimistic that gold and silver prices will keep rising. And I totally agree with Peter Schiff. We're in a time where I think somebody like Ben Bernanke just does not know what to do at this point. Another interesting little nugget, and this is from Bloomberg's Nicholas Lark. He said that silver usage in solar panels may double to more than 100 million ounces by 2015. Obviously, silver, in our opinion, and gold, they are money. And as well, silver has that other component. It's an industrial metal. And when you start hearing about a small market, as silver is, being used more and more for cell phones, laptops, solar, medical, it's being used every day, and in expanding uses, that market is going to become tighter. And they say that demand for the metal in applications was about 50 million ounces last year. Just for solar, it's going to 100 million. Obviously, supply and demand is going to be a concern in the years ahead. Another reason we believe silver will be going much higher. The telephone number to invest in precious metals, 1-866-623-2002. The website, www.pmc.com. Speaking of scarcity, diamonds, and we'll talk about diamonds and scarcity as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on June 10th, 2011, approximately 9:08 in the morning Mountain Time, 11:08 Eastern Time. Our radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. And as we always say, if you miss a show, would like to hear it archived, go to Harold's website, HESradio.com, HESradio.com. To invest in precious metals, there's only one company that Harold recommends. You want to deal with a Canadian company that's been in business for 10 years throughout the entire bull run in precious metals. That's Worldwide Precious Metals. Their website, www.pmc.com, www.pmc.com. And the telephone number to connect with them, 1-866-623-2002. On the diamond side of things, Harold's website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. If you have never been there before, take a look at the Rare Colored Diamonds Historical Value Tracker System. It's a tool for you to view the potential future value of rare colored diamonds based on current market trends. It's proprietary. Harold and a team came up with it, and some people tried to rip it off, but Harold stopped them, and it's on his website only. You can take a look at it. Also, watch a BTV interview with Harold on colored diamonds and his website, rarecoloreddiamonds.com. It was interesting. This week, Richard Russell came out and said colored diamonds are currently taking precedence over white diamonds, something we've known for quite some time. Our featured diamond of the week you can find on rarecoloreddiamonds.com. This spectacular diamond is a .26 carat square cut, and this is just beautiful. Square cut Emerald Fancy Intense Pink VVS2 Argyle. And the square emerald cut is very rare, and the color is sensational as it's nearly flawless. Very seldom will a diamond like this become available for sale. Most Argyles are graded only on their color and clarity with this. This diamond was also graded VVS2, a nearly flawless pink diamond. This is another Argyle pink that could be and should be a core holding in your portfolio. It is absolutely stunning, Harold. I know that this one will be snapped up very, very quickly because Argyle pink diamonds getting to be very, very difficult to find.
You better believe it, Randy, and it is a beautiful diamond, and it will sell very, very quickly because it's reasonably priced also, especially for a near-flawless diamond. But what I'm noticing, first of all, is that most people don't know about diamonds. The fact is that rare colored diamonds are just so rare that they're so different from white diamonds. However, there is a correlation between the two of them. Most people don't know that back in 1979 and 80, when we had extremely high inflation and the precious metals markets ran to record prices and interest rates went to 20%, diamonds, both white diamonds and colored diamonds, both went up tremendously those 2 years. They went up 500%, meaning a diamond that you bought for $20,000 2 years later was worth $100,000. And the fact is that I noticed back at that point that when the inflationary market started to trade, and I was trading in metals at that particular point and trading also in diamonds, that I noticed that the Rappaport list that the price for white diamonds was on the rise, and that there's so many more white diamonds on the market than there are colored diamonds. It takes 50,000 carats of white diamonds just to find one colored diamond. It takes 1 million carats of white diamonds just to find one pink diamond. So the fact is these diamonds are extremely rare. But in 1979 and 80, when the inflationary market started to hit, just like they're doing now, the price of diamonds took off. They raised prices every single quarter, and the diamonds went up 500% within that 2 years, and people absolutely made a fortune. The reason I'm bringing that up, the same situation is starting to happen now. In fact, we reported to you a few months ago that when we were in Basel, Switzerland for the Diamond Show, we literally saw back then that the Rappaport list, the price list for white diamonds, was on the rise. And again, that sort of triggered a memory in my mind of going back to 79 and 80 when the same thing happened. Now we're seeing that there's going to be a similar situation. In fact, Rappaport just came out with a report saying that prices rose by 7.7% in May. Just in 1 month, as retail sales in emerging markets improved. So they're basically saying that they're expecting a massive increase in the price of diamonds over the next 5 years. If you get the newsletter this week, there's several reports in there, and they're all talking about it. They're saying for the foreseeable future, 5 years, it seems that the demand for diamonds is going to exceed supply, said Chairman Nicky Oppenheimer. So it's not only Oppenheimer that's saying this, but so is De Beers. So basically, we are going to see, in my opinion, and others that are extremely knowledgeable, and I've been saying this for the last few years to you, that the next 5 years in diamonds are going to be the best years we have ever seen, as there are shortages in the market and we've got inflation on the rise. And as these countries continue to go bankrupt and currencies continue to get in trouble, people flock to an asset like a diamond. The diamonds that we recommend And we carry all diamonds. We carry some of the most expensive diamonds in the world. I have diamonds starting at $15,000, and I have a diamond that's literally $35 million. It's a 102 carat emerald cut diamond. But basically, most of my clients invest under $50,000. Most of our clients are just hard-working, everyday men and women that just want to do the right thing for themselves and their family. And things are getting so frightening in the world financial market